Move on to take a look at an example. Assuming that, again, a company declares $50,000 of dividends, same example that preferred shareholders is still entitled to get $6,000 every single year. It tells you that this company has dividends in arrears for 1 year. That basically means last year they didn't give out any dividends. So there is an accumulated amount of dividends from last year that will be carried on to this year. That is what the first bullet point, dividends in arrear for 1 year means. Okay, it carries on to this year. So now for this year, a company's preferred shareholders will be entitled to get not just $6,000, but $12,000 instead, because last year they got zero. Okay, so the journal entry here to declare the dividends will be reducing $50,000. This is given to you. The problem tells you we're declaring $50,000. $12,000 goes to preferred shareholders' hands, and then anything that's left over, the remaining goes into common shareholders' hands. Okay, so this part on a yearly basis is supposed to be $6,000 only, but because last year the problem tells you company didn't declare anything, so it carries on to this year. Altogether, they're getting $12,000. And again, the calculation is based on the dollar amount of each share times the number of shares out there in total times the dividends rate. Okay, so it's actually very similar to the idea of interest, except that here what we call we're considering the reward to shareholders, so it's considered dividends. It's not a responsibility to give them every single year. Depends on company's operation. Okay, so the 6% there is the dividend rate.